Harsha, I was just going through your fact sheet, and it's quite intriguing to know that the way to play defense, according to you, is via aerospace. Tell me, what is it that you find interesting about this pocket, and if you can just identify some themes or companies within that?
Aisha, we have been very positive on defense for quite some time now, and we started building our positions when the government started to focus on indigenization and also larger investments continue to happen into defense, etc. And given the fact that now the geopolitical issues are so significant and most of the economies, most of the regions are looking to spend more on defense, I think clearly you will continue to see a higher level of investments going into defense, not just in India but also in other countries. And for Indian defense manufacturers, the opportunity is twofold. One, they can continue to cater to Indian demand, and also at some point of time, you will have export opportunities. So that's something that we have been very keenly watching. While valuations are on the higher side, we are not increasing our position at this point of time. But I think everything that is focused on aerospace, electronics, etc., and also explosives, which is going to be needed across the board whenever there is a geopolitical issue and a war, are the segments within defense where we have positions and continue to believe that over a medium to long term, this is going to continue to outperform. However, in the short term, yes, the valuations are on the higher side, so one needs to have a little bit of caution.
Okay, and Harsha, well, earnings season just around the corner. In fact, we're right there. Give us a sense of what you're expecting for earnings this time around. Do you believe that we could do better than last quarter? Because expectations this time around too are rather tempered.
It's unlikely to be anything very exciting, but yes, maybe marginally better than the fourth quarter of last financial year is what we can expect. We do believe that the first two quarters of this financial year, we will be somewhere in the mid to high single digit in terms of earnings growth on Nifty basket. And eventually in the second half, they should improve to slightly better numbers and move into double digits, and thereby taking overall full year numbers to maybe 10-11% kind of year on year growth. So yes, I mean, if you're sequentially looking at it, maybe there will be slightly better numbers this quarter, but I don't think that's going to really excite the markets in a big way.
Harsha, so in the light of no expectations from earnings season, lot of paper supply, can we say that we actually should expect a downward bias now? I mean, next 2 quarters, because there are no triggers. Everyone knows that which way inflation is moving, which way tariffs are moving. If demand is coming back from FI, supply is coming from promoters. So are we in that what could be called as a nothing sort of a market or a very low return patch now?
Nikunj, frankly, last 6 months have also been more of that nature, and probably that could continue into another couple of quarters. And then once there is a little bit of confidence on the earnings trend improving or credit growth improving, that's when probably you will see more legs for the market. Having said that, I mean, the market volumes at this point of time have not been significant. So to that extent, any of the liquidity events can drive markets one way or the other. So that's something that one needs to keep in mind.
All right, Harsha, really appreciate your time. Thank you for joining us.